PLC, which is developing the outstanding Emmerson potash project, which is located in northern Morocco. Before we get into a bit of detail, a recently released note by a very well-respected analyst here in London, Phil Swinfen, describing this project as a robust project with outstanding economics, sector-leading capital intensity, and lowest quartile all-in sustaining costs. So that leads us into the rest of the discussion. This is quite a grandiose claim, but this is a world-class mining asset. And I say it's grandiose because, you know, it's obviously my opinion that I'm putting out here. But what defines a world-class asset? Well, number one, if it's a development stage asset, it has to be low capex. So we are looking for low capex projects. Secondly, once you're in production, got to be bottom quartile delivered cost to customer, or bottom quartile all-in sustaining cash cost. And then the final aspect of it is mine life. It's great to have those first two things, but if it's only a 5-year mine life, well, you know, that does not allow you to be a world-class asset. So getting into the detail of the project, we released a scoping study. It doesn't matter. We released a scoping study in November of last year, which basically showed that this project is among the lowest capital cost development stage potash projects in the world. In fact, less than 10% of the total capex of the last potash mine that was built in Canada. The scoping study also showed that it is in the bottom quartile, all-in sustaining cash costs delivered to all of its target markets. And finally, a 20-year initial mine life. So the attributes are there for a world-class project, and I think that's reflected in the NPVs that were delivered from this scoping study, despite the fact that the potash market is currently relatively depressed. It's recovered a little bit, but the prices are historically low, and we're still achieving a post-tax NPV 10 of over $1 billion. That is a very good asset to have in the hands of a junior. But the 20-year mine life is really only the start. This is an enormous basin. We haven't even touched the edge of it. It's already got 20 years of mine life, and we expect with ongoing exploration, which is occurring right now, that we'll be able to extend that significantly. So we're talking not an additional 5 or 10 years, we're talking doubling the mine life or even more with ongoing exploration work. So then if we take the fact that this is a world-class mining asset with very low capex and very high margins, huge mine life, and then we look at the potash market in general, which is one of the most tightly controlled commodities in the mining space, you start to realise that this is potentially an incredibly strategically valuable asset. What I'm showing here on this page is, in the world of potash, there are only 10 producers globally. 10 producers for the whole of the potash industry. Each of them have multiple mines. Vale used to produce, but they recently shut down their mine. The numbers of potential customers for this product and the number of potential strategic partners for an asset like this is virtually limitless in the fertiliser space. Every single one of these companies that I've listed here is attempting to play in the downstream fertiliser space and be a value-added fertiliser blender. The most difficult portion of their manufactured product to get is the potassium, the potash. And so you can imagine, as we look to finance this project, we will be speaking to a number of these. A bit of background, myself and the management team, we have been involved in the potash industry for about 5 years, so we know virtually all of the people on this list. We feel that there will be a huge amount of strategic interest in this project as we move closer to that big financing decision which will come in the coming years. So we're located in Morocco, and as far as the world of fertiliser goes, Africa is the growth centre for fertiliser. It has 60% of the world's uncultivated arable land, and amongst the lowest fertiliser usage of all of the agricultural destinations in the world. So what this map is showing is just fertiliser application, red being very low. Virtually every fertiliser producer in the world recognises Africa as the frontier, and it's the growth region that they're all focusing on. Every single fertiliser company in the world is starting to open distribution offices and all of those sorts of things in Africa to try and tap into this future growth profile. And of those destinations, Morocco is doing it best as it currently stands. So the world market for potash over the last 20 years has grown at between 2 and 3% per annum. A little bit above inflation, nothing to really shoot the lights out. Morocco, since 2012 has been growing at over 140% per annum for demand for potash. That's been driven fundamentally by a large fertiliser company called OCP, which is a Moroccan company, the world's largest producer of phosphate rock, a key fertiliser. But growing 50 to 70 times faster than the global market, and this is the market that we will be eventually producing our product in. So a strong demand thematic in the region around the mine that we're going to be operating in. We heard a little bit of a summary previously about the Fraser Institute. I think one of the better risk analyses in terms of where to invest in mining is done by the Mining Journal World Risk Report. It voted Morocco as the #1 African jurisdiction for investment in mining. It's an incredibly stable jurisdiction, very, very transparent government in terms of trying to attract foreign direct investment. A new mining code which creates a great regulatory framework and really supportive fiscal terms for new companies like us as they try to attract new mining ventures to come into the country. So I pose the question, is the market valuing this opportunity correctly? We put out the scoping study, which I was incredibly happy with, into probably the worst market of the last 2 years in November of last year. And we got virtually no credit for it. That started to change a little bit in the last couple of months. People are starting to say, okay, that sounds like an interesting project. But I posed the question, I won't answer it for you, but I will point out that as it currently stands, we're trading at a 97.5% discount to the NPV that we put out in the scoping study. A 97